Everybody, welcome to the morning market briefing Friday, October 28th, 2022. Spooky season, guys. Spooktober. Markets are spooked. Today, futures down just a little bit right now. Dow futures down 2 basis points, so barely down. S&P futures down 53. NASDAQ futures down 98. We've got some pretty good sourcing for those problems, but we'll get to that in a moment. Tom, is the Fed going to pivot the pivot?
Yeah, so that seems to be the big headline this morning is that, surprise, surprise, the Fed is not going to pivot per a Bloomberg article saying this morning that they're going to raise rates to 5%. There's a lot of Twitter action from our boy, Nick Timiraos, who is known as the mouthpiece of Jay Powell for the Wall Street Journal. So I expect we're probably going to get an article from him saying roughly the same thing.
Is there anything you'd less want to be known as than the mouthpiece of Jay Powell?
I don't know. The White House press secretary is a pretty tough
That's
gig.
a tough gig too.
It's a really tough gig. Yeah, so we're seeing some quite a bit of selling on fixed income today, which is probably not to be a big surprise, given that we've seen a big run up over the last couple of days. I mean, just tons and tons of buying in the 10-year. We had a 7-year auction yesterday, which was pretty soft, but that was off the back of a huge move in the morning, pushing the rates down quite a bit. So not a big surprise there, given that, basically they were buying at the high of the day. There's not going to be a ton of action at the highest price of the day on an auction. But, all this talk of the last week or so where they're like, hey, Fed's only going to do 50 basis points. Fed's going to change. Fed's going to do something else. Well, it turns out probably not, which was our expectation the whole time. The expectation that we're going to get 6 rate hikes this year for me is still 100% intact. Futures are ticking back up that direction again. So, we're getting some data in this morning as well. We've got the PCE number, which is the inflation number that the Fed looks at. And it's probably their favorite indicator. And there was a little bit of positive news there. So the year over year on the full number, the expectation was 6.3%. We came in at 6.2, so slightly under, and no change month over month. So 6.2 last month, 6.2 now. And they're expecting an increase, which we did not see, versus we saw German inflation number come out and it came in like more than a full percent higher, I believe, than their expectation. It was like 10% versus like 11.1.
What month was that for? September, October?
This is September. And then the number that Nick Timiraos is tweeting aggressively about this morning was the employment cost index, which is essentially wage inflation, also came in at 1.2%, which is down month over month from 1.3, but in line with expectations at 1.2. So we're sort of, I would say, again, like all these things we've gotten, it's sort of a mixed bag, which is to say that it came in very high, right? We're still in line, pretty much exactly in line with where we were on every number last month, but we did not see a massive increase or a surprise upside. So I'd say, inflation is not accelerating, at least to the degree to which other places are, like Germany, which we saw this morning, but it's also remaining elevated.
Yeah, I think it underscores the non-pivot from the Fed, where it gives them just enough ground to stand on to say, hey, it's kind of working.
Yeah, we put the foot on the brakes and the car's not going any faster, but it's also not slowing down. And you dovetail that with the GDP number yesterday, where we saw economic ramp up in the third quarter. I would say that now's the time for them to get aggressive and maybe squash this thing, which I think is the read that everyone has this morning.
What are we seeing even this morning on rates? Seeing upticks?
Yeah, we got all the way down to like a 390 on the 10-year yesterday, which is a 35 basis point move over 3 days. And we've ticked back up. We're right around a 4%, which is about where we've been on average for the last, call it a month or so. So we're moving back towards the high side, but we're nowhere near where we were to start the week. So still net positive for bonds, but a little bit of a sell-off today.
Been any takeaway on the Fed, macroeconomic picture, any of that? I know we got a ton on earnings, so you're going to get plenty of chances to chat. But
no, I mean, I think that Tom said exactly right. It'll be interesting to see how this fits into the Fed's narrative, because if you think back to that Wall Street Journal that Timiraos had last week, he said that they want to do less in December, but don't want it to look like a pivot. And so I wonder if this is all playing into it. If they're now saying, okay, we've got people thinking that we might do less in December, but we don't want them to read it as a pivot. So I wonder if that's kind of the genesis for what he's trying to do this week, and basically just be the puppet master for the entire U.S. economy, which is incredibly arrogant that you can manage sentiment that way, but they certainly think that they can do that.
Switching gears dramatically. I feel like we've been talking about this all year, but Elon Musk bought Twitter. It's official. It's done. He can to the CFO. He can to the CEO. He plans on being CEO in the interim. He could cede that. I don't see him letting go, man. I mean, this is not a guy that's, he's not an interim head coach. He wants to be the head coach of every team.
It should also be noted that he specifically fired the woman who chose to ban Donald Trump. That was going around last night, is that there are all these articles where it's like, this is the woman who did it. She's the one who spearheaded it. And then if you look at the people he fired, it was like CEO, CFO, and that woman named specifically. So pretty interesting.
Vengeance.
Big day for the first day for Elon.
It is.
He's like, I'm happy to be here, but not you, not you, and not you.
We were going to talk about consequences for Tesla, but Truth Social, hot seat. Is our favorite president coming back? Who knows? This can't be great for Tesla. I mean, we've seen this before with Jack Dorsey splitting time between Square and Twitter. You just can't do all. If you're the CEO of two companies, you're not the CEO of one.
Is Twitter going to hold a record for having been the company that is the second banana to another CEO of another company more times than any other publicly traded
it's got to
company?
be up there. Yeah.
I can't think of another example of where one company has been a sidecar to another billionaire.
I feel like Twitter is just, it's a fun asset in concept to hold, but at the end of the day, people just don't enjoy managing the company, running the company. It's a very boring company, I think, for these guys.
So it's the Seattle Sonics.
Counterpoint though, I kind of agree with your sentiment, but I'm kind of like, at this juncture, why is Twitter not largely on autopilot? Is it, are there steps to be taken for improved financial standing, generating actual revenue and earnings? Like, sure, but I don't know. It's a pretty mature company. It is what it is. A lot of people use it. I don't know. If I'm Musk, I think I'm just kind of like, it is what it is. We'll see what happens. I just spent a ton of money, but whatever.
I think internally, the people who work there or have worked there and no longer work there viewed themselves as a political baton.
Yeah.
There's all this stuff. There's that guy, Alex Berenson, who got banned from Twitter. And then when he got reinstated after it turned out there was a big conspiracy against him, they have literal emails from the White House saying, hey, please ban this person. So I think they view themselves internally as like fighting the good fight. And I think that unfortunately that those days they're either changed to fighting a different fight or they're going to become a little bit more neutral. But I think that they were less concerned with making money and more concerned with like their position within the social hierarchy. That's how I viewed it.
Yeah. I think there's definitely a disconnect between how everyday consumers of Twitter view Twitter and how people that run Twitter view Twitter.
Yeah.
Does that make sense?
Yeah.
I feel like I probably spend more time on Twitter than any other social media app and probably any website other than work stuff, but it's kind of out of a sense of this is weird and quirky and whatever, not out of a sense of, this is where I go to be informed.
Yeah, correct.
So we'll be interested to see how all this plays out. My wife asked me yesterday why Elon Musk bought Twitter, and I didn't really have a great answer other than like he wanted to own it.
Yeah.
That's kind of it. Elliott Management, meanwhile, has boosted their stake in Swedish Match. This will hinder Philip Morris' offer to take over the company. Ben, this is a kind of an interesting story because I think the Swedish Match acquisition as it related to Philip Morris was generally seen as favorable, but they're getting real pushback.
Yeah, so they got this activist in there by the name Elliott Management's Paul Singers. The guy is not a good guy. I don't like Paul Singer. I think he definitely uses his limited partners capital to bully people around, and I just disagree with his methods, but each to his own, I guess. But he's trying to do that again with Philip Morris. So he has a 10.5% stake, which means that he can reject this deal, and he intends to reject this deal. Philip Morris had given its best and final offer last week. Doesn't appear willing to negotiate with it. They could reduce the shareholder acceptance threshold from 90% to something lower so that Elliott Management can't by its own volition block the deal. But at this point, Swedish Match just reported their earnings. They were not good. I think that their Zyn product, its hyper growth phase may be fading a little bit. And as a result, I actually, at this point, say, if they're going to make it this tough for you, just walk away and buy back your own stock, Philip Morris. You have ICOS, you're going to be fine. You're going to get into the US market. Just do that. And I think that would be good for the stock.
Yeah. If I was someone who is intimately involved with this deal working at Philip Morris, I would be very scared because Paul Singer has a reputation for playing extremely dirty. And if you have any sort of arrest record or some sort of situation, domestic abuse, he will find it and he will publish it in the Wall Street Journal and will take your leverage piece away as quickly as possible. He's done it before with the Athena Health deal and one of the Bush cousins. So I'd be a little
He did it with the Argentinian government.
Yeah, he did. Yeah, he held all of Argentina hostage, and he does not care. He's quite a robber baron in the world of finance. So, yeah, I'd say walk away. Just let him have it, man.
Yeah,
Go
there
ahead.
you go. You
Yeah.
heard it here first. If Tom works there, he'd be worried about his own arrest for domestic violence.
Yeah, I'm just saying.
Breaking news here on the morning market briefing. Earnings, lots came through the pipeline yesterday. Quite a bit of variability as it relates to company performance. Let's start with Apple. Pretty decent quarter. Market's down a little bit right now. Apple's up about 0.5% relative to other companies that we're going to discuss here in a few moments. Pretty solid.
Man, Apple its ecosystem just continues to demonstrate strength. A couple stats here. Record number of upgraders, double-digit switchers to the iPhone, all-time highs on their services engagement, record highs in transacting accounts, record highs in paid accounts. They have over 900 million subscribers. That's up 155 million from last year. For context, Meta has 3 billion users monthly, and Apple has 900 million people subscribing to their cloud product, their music product, their TV product. They have more coming out on that. They're going to start raising prices on that. So that's all good on the Apple side. Their results were juiced a little bit by the Mac. They had some supply chain issues last quarter that normalized this quarter, so they made up for it. So that'll revert back in the December quarter. And they do have a 14th week in the December quarter that makes it a lot easier to grow. I think absent that, you might have actually looked at a negative December quarter for Apple, but iPhone is strong. That's what matters for this company. Services should reaccelerate. That's what matters. And I think Apple's really demonstrating itself to be a real utilitarian product and something that withstands some macro forces. Emerging markets were all up double digits. So really showing some good growth despite a 10% headwind from currency.
Yeah, very impressive performance. Amazon, not so much. Tough quarter, really tough guidance. Ben, how would you kind of characterize where Amazon is right now?
Yeah, I mean, it was bad. I think you got the slowest revenue growth in Amazon's history, even slower than 2008. That's what their guidance implies. Amazon Web Services decelerated throughout the quarter. It exited at 25%, well below the 29% estimate for Q4. And I think those estimates are going to come down to like 23, 21% if I was looking at some of the research this morning. So Amazon Web Services really deteriorating in rapid fashion. Online stores will probably only be up in the low single digits next quarter, despite an easy comp. However, in contrast to Meta, I think Amazon stock could have been down 25 to 30% overnight. But in contrast to Meta, which said we're just going to keep spending and our capital intensity is going up, Amazon cut its capital spending by 1/3. It's reducing staff. It's finding efficiencies. They talked over and over and over about, quote, tightening our belts. And I think ultimately you get this confidence listening to the conference call that Amazon's going to be hurt by the macro environment, but they are going to focus on costs. They're going to focus on getting free cash flow. And once they do that, they're going to be just fine on the other side of this. So that's what they did. That's what Meta should have done. That's what Meta cannot do. And for that reason, I think that Amazon actually rallied from the depths of where it was last night from 20%. Now it's still down 13%. It was a bad quarter. It was bad guidance, but it could have gone a lot worse for them. I give management 5 stars on that conference call. phenomenal.
Yeah, it really, I mean, it was dropping like just something that drops fast.
Yeah.
That was a great analogy. I mean, it was just plummeting, and to actually see it down 13% is relative improvement.
Like a ton of lead on Jupiter.
Yeah, there we go. And that's much better than the generic something that drops fast. Intel up 6%. Much to the chagrin of Sam Frost, portfolio manager and analyst here. Very upset by that.
Yeah, I mean, Intel. I mean, if they stay the rest of the day up 6%, I will be very impressed. I think it's kind of like Comcast. We talked about Comcast yesterday. It was up 7%. It ended up closing up maybe a little bit. But I think you're getting a sugar high there. They're cutting, like Amazon. They said they're going to cut costs where they can, except the way they're cutting costs is just using government money to do it. So they still have all these capital spending plans, but now they get government assistance with that. So they're going to be able to maintain that dividend, at least for now. But revenue is pretty miserable. Data center down 27%. You had guidance for next quarter down 23 to 28%. Gross margin is down 15 points from where they really want it to be in the 60% range. So, I mean, things are bad for Intel. They're going to get worse. Right now, it's nice to see that a stock can go up, but I wouldn't buy it here.
T-Mobile up 3%. Really good numbers on new customers, especially on the phone customer side. Operating well. I mean, this is a company that quietly is up 20% for the year. So strong free cash flow. Pretty solid execution there, up 3%, getting rewarded for that. L3Harris, another defense company facing some supply chain issues. Ben, how would you classify what they're struggling with, and why? We've heard from a number of sectors where it seems like supply chain is getting better. We mentioned Apple even earlier as it related to Max. Why are the defense companies struggling so much?
Yeah, so this is something that we're really focused on this morning. We have two analysts actually both looking at the conference call as we speak. They had pretty good orders, but it's taking a while to actually translate into revenue because we have a continuing resolution in the United States. Some of the revenue internationally is taking a while to come through, even though the bookings numbers were actually quite strong. And the margins were weak because of cost inflation and supply chain issues. And they think that those will continue to last into 2023. And I think that's just what's gone on in defense, is that as we came into this year, the thinking was we're in a peacetime, we're cutting spending. The defense budget was relatively small. And then all of a sudden we had to jack it up. And when you do that, you don't really get that revenue immediately, but you do get the costs because you have to hire. You have to hire in advance of that. You have to build out your supply chain. And so these defense companies are all kind of frenetic trying to add people and add capacity, but they're not really getting anything on the top line, which is pressuring free cash flow, which pressures dividends, which pressures buybacks. And that's what we're seeing at L3Harris, unfortunately. So we'll continue to watch that and see what happens with that going forward. It's had a good year though. I mean, it was at very high levels coming into the print. So it's going to give back some of that this morning, but in context, it still performed quite well.
Heard from another number of energy companies. You would expect this to be a period in which these companies shine, but they still have to execute. Any high level takeaways from Exxon, Chevron, the others? Yeah,
production kind of in line with expectations. Pioneer, interestingly, is spending all of its free cash flow, more than all of its free cash flow, returning money to shareholders, which I'm sure our president will love, rather than increasing production. And then you got Exxon and Chevron, who really beat expectations due to strong refining margins, which again, I think will not go down positively at the White House.
Meanwhile, NextEra reported a little bit later this morning, so we didn't have tons of data, but pretty strong quarter.
Yeah, really strong quarter. Despite, I mean, they operate a lot in Florida, and their Florida power and light business just rocketed this quarter. And the reason that NextEra and these utilities do well is that the more they spend on capital, the more money they make. So if you invest $10, then you make an additional $1. So they're incentivized to continue to spend, and they're continuing to spend. Their invested capital was up 11%, and shockingly, their earnings were up 11% too. So that's just the math, and that's why we like NextEra.
This week seemed like it was all about earnings. Next week, it'll be a little bit more about economic data. We do have a lot of earnings coming through, but not the big names that we saw this week with the Apples and the Amazons, the Metas of the world. Next week on the economic side, we'll get the jobs opening report on Tuesday morning, as well as ISM manufacturing. We'll get ADP employment on Wednesday, the Fed meeting on Wednesday, ISM services on Thursday, Friday, the employment report. Guys, as you kind of look to set the table for next week, what's top of mind?
Fed.
Yeah, Tuesday is D-Day. And right now, I mean, even after all the information that came out, it's been digested this morning, we're looking at 3 rate hikes, and I don't see a surprise coming either way. I think they hit it on 3, but I think that the market reacts strongly.
We need a live feed from the Schwab conference, because I'm sure I'm very interested. So Andrew's going to be off at the Schwab conference in Colorado next week. I'm curious to see how many of those people are tuned in to the
Very
Fed.
few. I don't want to badmouth the rest of the industry, but we're the only ones that care. No. Yeah, it'll be interesting. I mean, I've heard stories about, so Schwab does a big annual conferences. I've heard stories about just the despair and calamity of the Schwab conference in fall of 2008. I'm interested to see if that is the vibe this time, especially given the context of they've not had this gathering in person in, I guess, 3 years. Will it be one of, jovial rejoining of the minds, or will it be one in which people are actually weighed down by what's going on and actually locked into what's going on with the Fed?
Will it be a let them eat cake situation?
Yeah.
Or
Yeah, it's going to be interesting. I was talking with John Grayson yesterday about it. I was like, it's going to be a weird dynamic, because in theory, this should be a period in which people are pretty worn out, pretty downtrodden, trying to figure out what's going on, hyper locked in. It's a big conference. There's 2,000 advisors there, whatever. I don't know. I mean, a lot of those guys, they are much more allocators than they are investment advisors. They're not really building portfolios. They're allocating to mutual funds, and a lot of that is outsourced either to a model, or they have a chief investment officer that he's probably back at the office grinding while they go to cocktail hours. Yeah, it's going to be interesting, I think, honestly, from just a people watching and behavioral monitoring standpoint. I have a feeling I'm going to be in a room of a bunch of people that thought there was going to be a pivot. So maybe there is a little bit of a, recoil. I don't know.
They're going to be thinking whatever CNBC said the day before.
Yeah, exactly. Yeah, that's kind of my thought as well. But yeah, it'll be interesting. I'll be here Monday. So we'll all be on the call Monday. I'll try to hop on some from Colorado. I'll be out the Tuesday for sure, because I'm flying out right during the morning call, and then maybe Wednesday, Thursday, or Friday, hop on with you guys and have a good time, chop it up, But hope you guys have a great weekend. We'll be back for Halloween. Get your costumes ready, and we'll talk to you soon.